Listen, family, if you guys are ready to take advantage of the market this week,
How are you?
let me know down in the comments below. I need everybody to make sure you like, subscribe. Make sure if you're not already, you get in the Discord, because we will get to it first thing in the morning, and we got a short holiday week for Thanksgiving, okay? Market half day Thursday or close Thursday, half day Friday. Make a note of that for me. Everybody else, consider joining the money team. As always, guys, make sure you like, subscribe, help this video get 1,000 likes. We will have class on today because I need to help you take advantage of what the market is doing. Remember, everything around here is about the technical piece of the game. We ain't guessing, we ain't gambling. This is how we take advantage of the opportunities. But more importantly than the opportunities is what's before you. And that's the chance to buy quality companies at low discounted prices, okay? A lot of the stocks are down 20% or more, and we call that correction territory. We call that back up the Brinks truck territory. We call that buying opportunities for our long-term thesis, okay? So we're gonna unpack it, okay, by breaking down the market. So without further ado, let's go ahead and dive into it, man. Listen,
Already abandoning ship.
I'm showing you guys
EOS.
the SPY here on my screen.
Gemini.
Ticker symbol for the S&P 500 is SPY. Currently sitting at
Got a nice echo going on there. Okay. If you got comments, go ahead, lob them at me. Otherwise, we're gonna get going here. Jump into a little breakout on EOS Energy. They raised $1 billion recently. They have a $23 billion pipeline. Okay. EOS. Trump's energy stocks will help you retire early. This is not financial advice. I'm not a financial advisor, but people with such certifications might say that my research suggests that this company could go up significantly in the near future. The company is EOSE. That's the ticker. EOS Energy, they do battery storage for renewable energy. They raised $1 billion recently. They have $23 billion backlog, which is crazy. And they did recently have a fire just yesterday. But it turned out that, according to their report, it was not the batteries themselves catching fire. They do batteries for energy storage. It was a short at their facility. So that bad news is brushed off. The stock looks to be holding up well. It's actually down a bit over the past couple of weeks, like many stocks have been. The market did have a big day today, Moon Day Monday. It's common for the market to go up on Monday, or at least it often is associated with a lot of buying. And right now, all the speculation names have sold off. Quantum sold off. CoreWeave has sold off, which is a data center, basically a intermediary between GPUs and companies like Meta and Amazon, who use those GPUs, and OpenAI, who uses a lot of those GPUs. So a little bit of the transition from where we are now, AI is here, but not nearly as usable as people would like it to be. You can try ChatGPT, you can try Claude, you can try Perplexity. You'll get rate limited. They'll say you have to retry in 24 hours, or you can pay the money and they'll give you an extra capacity. But it sounds like the need for more usage of LLMs and AI is real, based on all of the data center build outs, based on all of the energy build outs. And this battery storage company is well positioned to capitalize on that with a massive backlog. So let's jump into recent earnings and info on this company.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is EOS Energy. They're a $4 billion market cap company, and they deploy battery for renewable energy markets. Now, this is really important because Edison, New Jersey is actually sort of the capital of energy. This company does have the capacity to raise money, which is good for a startup, but it's not great if you're a near-term investor. Luckily, they don't need cash right now, so that's notable. If we look at their cash, this is their position, over $1 billion, and we can see what they recently raised. 2 million, 5 million, and more recently, some massive numbers up to 525 million, 500 million, basically in the past couple of weeks. So those are the prices for those. There's a registered direct offering, a private placement, debt. So $12, $16, and we look at the stock price. This is where we're at right now. So the raises were right around here, the stock price, up way above, and then right at the current price. And so it's not necessarily telling us the stock's going to go up, but it's definitely not telling us the stock's going down. And if they just raised $1 billion, they're unlikely to raise immediately. Here's what we're seeing on the chart. And yeah, it's definitely not a great earnings reaction, but if you look at a lot of companies' earnings reactions, they went down. You know, Microsoft went down. Netflix went down. The market as a whole went down over the last couple of weeks, and it's only the last couple of days that have really gapped up. EOS is holding over the last couple of days. It's not as strong as the market right now. The challenge when you have a couple big up days in the market is a lot of other companies have big up days in the market. So you kind of end up looking for stocks that actually went sideways even as the market went up, if you're looking for an opportunity to get in with low risk. So this is the opportunity right now. 1270 just about would be the level to risk. Maybe, you know, a couple days it goes close, or something that you pick and you just decide that I'm going to sell if it goes underneath this level. So maybe it's here, as I mentioned, which coincides with this low here today, but you pick your level. It's just important that you pick it and stick with it. So that's the debt, that's the chart. And then if we actually look at what they're up to, well, this fire is sketchy, right? You have to wonder what the deal is here. Okay, it's risky knowing that that occurred, but if we look at the actual incident and some of the comments, the fire department reported batteries inside the building had caught fire. Okay, however, the energy battery storage company stated that there was no fire. It was just an electrical short, and there was no risk to the surrounding community. So you have to sort of read between the lines here. Obviously, the fire department is going to come no matter what, especially to a big commercial facility. But as more information comes out, I think it's going to be showed to us through the stock chart. So if the batteries were actually involved, I think the company's not going to do well immediately. But so far, it seems like the company's holding up. So what's really interesting about this today is that I just talked about how you don't want to buy stocks that just went up. And what this event sort of did was at a time when the market bounced significantly, this event sort of kept the stock depressed. And I think as this gets brushed off, the stock could go up significantly without the challenge of buying a stock that's already been up a couple days, which all the other companies are. So recent $1 billion capital raise is a big deal, as we mentioned. And then as far as what they're up to, well, look at this, $23 billion pipeline, 91 gigawatt hours of demand. So that's a ton. I don't know exactly how much that is, but I know 20 gigawatts is how much Sam Altman was talking about for the end of next year needing for OpenAI. And then in 10 years, 10 times that, 250 gigawatts. When you put it in hours, you put it in, battery terms. So we'll see what happens as those numbers sort of firm up at the end of the year. But this $1 billion raise is a big deal. They seem to be positioned pretty strongly. And I think this fire actually held the stock down at a time when the rest of the market went up, which is really, really favorable. Now, there's one other stock I want to talk about and to keep your eyes on. And it's not about batteries. It's not about energy per se. One thing that happens often is during times of uncertainty, gold goes up. And what was interesting in 2025 was gold went up not just as the tariff dump happened from January to April, but even as the reversal happened, gold continued going up all the way up to 4,500, just about 4,400. There has been a little pullback. There was some serious euphoria. And as the market pulled back, gold pulled back as well, had a little bounce, and then is forming a higher low here. So I do think there's a really interesting opportunity on gold in the next week or so. It's not clear exactly when it's going to happen. And I think the best way to play it is with Anglo Gold Ashanti because it's breaking out over this all-time high. If we look at a 5-year chart, we can see this is definitely the all-time high. And again, this is the challenge I was talking about with EOS, is when the market just went up a couple of days, you can see Anglo Ashanti Gold went up, Anglo Gold Ashanti, a couple of days. So it might not break out just tomorrow, right? Tuesday could be a selling day, right? Because today was an up day. So this could firm up over the next week, but having this really clear level over this 88 high is really important. And gold seems to be the safe haven given we have all these other stocks not doing well that are related to Bitcoin, because Bitcoin sure had a tiny bounce, but it went all the way down to almost, well, not almost, literally $80,750, yeah, per coin. So pretty rough. Ethereum not doing great as well. And just sort of to go around the horn here to make sure we can understand where we're at here. Last week, oil was down a little bit. Energy stocks were down a little bit. Had a little bit of a green day today. But natural gas is another sort of bridge source of energy that's doing well. Broke out a little bit here. And then if we look at some of the other stocks that were doing well, pharmaceuticals still doing well. This is one ETF that can show pharmaceuticals, but if that doesn't want to load immediately, we can just look at healthcare, which is doing pretty well as well. Oh, I see what I did. I put on 24 chart hours. So healthcare is still doing okay, but interestingly today, healthcare sold off a little bit. Pharmaceuticals, okay. But when we compare that to some of the other sectors, energy, not great. Utilities, big green day. And then if we just look at the actual tech stocks, this was awesome. Big green day. So what looked like was going to happen was money was coming out of financials, but financials are back, big tech's back. Basically, the biggest stocks in the market are back. And then these companies that we were a little uncertain about, the healthcare stocks, not doing quite as well as expected. And we can see that with some of these stocks that did break out are in biotechs. So if we look at XBI, biotech did awesome today. Another way is LABU to look at that. But if we directly look at some of these healthcare stocks, think about companies like Eli Lilly, did okay. Novo Nordisk was doing bad and just did, okay, but it had a big gap down. Thermo Fisher, which seemed like it was doing great, actually didn't do well today. just sort of went sideways. So these big name companies had money flow into them. AMD, for example, pretty much all the companies, Meta except for Nvidia, which didn't do great. It had a little green day, but all this to say, if you're looking for the next stock to get in a safe space, I do think gold is interesting. And this is a stock I actually mentioned in the Discord this morning, KGC, and gold had a big day. So it could take a while for stocks like this to break out, but I think this Anglo Gold Ashanti looks like it can break out over this level in a way that a lot of these other stocks, NEM is one of them, could take a while, AEM, they just are building out sort of bases and they have this big high to get back over. And look, gold futures could go up a lot. They could not. It might take a week or more. It's tough to buy in a range, as I mentioned, which is why EOS looks interesting in the first place. But I wanted to give you this other idea with the backdrop of the market in general, just to make sure it's out there in advance. So that's AU. And if we look at basically what they're up to, let's do that. Here's the size of the company, a little about the company. It's just good to use this tool to make sure you're not dealing with a super small company, which they're not. They are an ADR, but they're not some Chinese company that's listed on the US exchanges that doesn't have super reputable accounting. They're from South Africa, as a lot of these gold miners are, and they have a $35 billion market cap, right? So you don't have to worry too much about this company in a way you might have to about, let me put an example company in here that's also an ADR. XXII is the example I always use, with the past 6 months. So this is a $5 million company, right? They're a plant biotechnology company. And then if you look at the chart, for example, this thing has been absolutely horrendous. So I'm just differentiating. Anyone who's in stocks for a while is sort of laughing or tuning out right now. But the point is, you have to really make sure you're looking at big market cap companies, or if they're like 500 million or more, just make sure that they have some connection to reputability. So about $1 billion of profit in 2024. That was a while ago, but there's going to be challenges with any company that's located in sort of a dangerous spot. But the price of gold has definitely helped this company. Mining is always going to be, as far as I can tell, a volatile industry. And look, if you want to compare this to other tickers, you can, but I think the most intelligent way to look at it is to say, look, it's $3 million, 3 million shares times $80 a day. So that's like $250 million a day. So if you divide that by 100, that's like 2 million and then $3 million a day you can put in, click the button, and not move the stock. And that's pretty important when it comes up to a breakout point like this, because you don't want to be trying to get in at 86 and end up getting most of your position up to 87. It doesn't seem like much, but it starts to add up. So I think it's kind of in that sweet spot where some of these other companies are other ways to invest in gold for sure. But I think this is the right balance of liquid, but not too liquid. GOLD, NEM, sort of in the same conversation. KGC, again, the one that I mentioned. I'm not super excited about looking at debt to equity ratios. It's good to know that a company doesn't have a ton of debt. But PE ratios are definitely not seeming to be in tune with the current market. So I wouldn't get super worried about that either. But Newmont and Barrick Gold, if we look at the chart and we just make sure that we look at the liquidity, super liquid here. I'm pretty sure this is going to load, but slowly. If you just look at the gold ETF, again, all of them pretty much follow this characteristic. Super high, lower high, and then they have a breakout spot, but they have to get above this level. So for that reason, AU is the stock I think is interesting. If you have any questions, let me know. Drop in the comments. Those are the ideas. The main one being a little more dangerous, but EOSE, I think they're going to figure out that battery facility scenario. Hit that like button if you like these ideas. Try to keep these ideas short. We'll hit that subscribe button if you want a free course on how to buy stocks before they go up. And head over to stocksforme.com if you want the best idea of the day, like that KGC, which went up significantly today. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. That was pretty much a train wreck.
659, but check this out. Look at the open, 655. Okay,
really
look right underneath. Follow my screen. Look
wanna
right
do fundamental
underneath
analysis on
the
a gold
big
mining
price of
company.
659. The open
Just follows the price of gold.
was 655. Okay, so it went up $4 from there. The previous close was 652. I need you guys to make sure you are having demarcation points of where the high is, where the mid ground is, and where the low is. Okay, because this will help you understand how to at least establish some terms and forms of levels. Okay, it won't be the advanced levels that I'm going to show you, but at least let you know, okay, boom, we went to 652 yesterday, we went to 659 today, 655 is the middle. We're going to play within this range. Okay, I want you guys to know that. But listen, the SPY is sending some signals that coach has to go over with you guys on today. And so, guys, we are going to dive into the chart to kind of unpack it, okay? Without further ado, let's go ahead and dive into it. All right, check this out, man. I have the 4-hour time frame pulled up on the
look at his charts. Downshift. Nebius is pretty similar to Wolf, actually. So Q3 revenue of 150 million, up almost 400% year over year. 3 billion over 5 years. Deal with Meta. Pretty crazy. All right, 3 billion over 5 years, 100 million, 400% year. Okay. This one stock can change early buyers' lives. I'm not a financial advisor. This is not financial advice, but financial advisors might say to buy as much as possible before November 29th. My research suggests that Nebius is about to do very well. They have revenue reported from Q3 up 350% year over year, 140 million of revenue. So they're a small company, but they're in a very fast-growing field. They do software cloud services for GPU clusters, which is in high demand. They had a $3 billion 5-year deal with Meta announced recently, and even as Meta sold off significantly from earnings, that was more based on this 15 billion tax hit. So a lot of companies sold off recently. The market as a whole sold off. Big tech sold off, and now money's come back into big tech, speculation names, banks as well are starting to go up again. Money's getting sucked out of healthcare a little bit to a sort of a safe haven there. And this company, Nebius, looks like it can start to move up at a time when many of the other speculation names, it's unclear if they will move up for months. I'm talking rare earth names, talking about quantum names. We'll see about those, but this company has real revenue. It has a real chance for growth, and I want to jump into the fundamentals and also the chart. There's one other ticker I want to cover the second half of this video. It's ticker symbol WULF. It's Wolf, and they are transitioning from a Bitcoin miner to a data center compute provider. So the transition is supposed to be higher margin, and this company looks like it's bouncing right now. So good opportunity to buy that as well. It's not financial advice, but let's jump in.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's Nebius. The company's from Amsterdam, and this is what they do. They do GPU cluster infrastructure, software that works with GPU clusters and with Meta and with NVIDIA and with CoreWeave, and pretty much all these companies are going to have some interface with Nebius. That's my understanding. This is their revenue growth, 150 million, up 300% year over year. They did have a little bit of a net loss, just kind of a lot actually, 100 million. But they're also in the midst of a CapEx build out like all the data center companies are. So this is the big deal, 3 billion over 5 years. Hyperscaler is just the word now we use for these big tech companies. It's a little strange, but it just is what it is. And they did have a deal with Microsoft for 20 billion, which is also pretty insane. So if they can create more clusters and connect with more existing providers of GPU clusters, Meta is going to give them even more money, it sounds like. This is a lot. They're going to achieve 2.5 gigawatts of power and add a full gigawatt just by the end of next year. So I know Sam almost saying about 20 gigawatts, but this is a good start. This is a lot of money, $1 billion, spending 2 to 5 billion in total. But if we look at how the money is getting raised, it looks like it's not getting raised through the public, and it's a big enough company, 20 billion, where that makes sense. Dilution is worrisome. If you look at some smaller tickers, you will see dilutive instruments that are worrisome. Just to give an example that I have been giving, this little $5 million company, you have to be careful because there's a high chance that there's going to be shares sold in the market lowering the share price. So Nebius is not in that boat. We'll see what actually happens, but so far it seems like they're a surer bet than companies like CoreWeave that have been really held back, even though CoreWeave had I guess it was a $14 billion deal with Meta. CoreWeave wasn't able to go up. Core Scientific was also not ever acquired by CoreWeave. So all these companies in this ecosystem have news basically on a weekly basis. And so far, Nebius doesn't seem to have any news that's really, really negative. There are a lot of, ChatGPT says there aren't many exactly like them, but there's a lot that are in this same conversation of AI cloud, GPU data center, especially when you consider all the Bitcoin miners that are transitioning into data center plays that I'm going to mention in the second half of this video. But Iron is one example of that, just to get right into it. 10 billion 5-year contract with Iron to use their data centers. That's from Microsoft. And challenge there is, well, we'll see if they can actually provide that power. They own the power, so that's great, but there's still challenges actually making everyone happy who was around, literally residents living around the town, if it raises the price of electricity. So that's still an unanswered question if the companies like Microsoft are just going to have to pay up more for power than individual consumers. CoreWeave is another one that's in the conversation. had a 6 billion deal with OpenAI. But if we look at the actual price of CoreWeave, it's just been kind of worrisome. So just to zoom out here and look at Nebius, this is what we see, okay? It basically followed the market. We can see the market, the green in the background. And it's notably at a good spot because this gap up back in September coincides with pretty much the price we're at right now. And they recently had earnings, and a week later, the price has not moved so much. And you might say, well, it not moved, that doesn't sound good. But if we look at, other companies that had earnings, Delta Airlines hasn't really gone anywhere. These are, big companies, seemingly unrelated. Some of the best companies, Caterpillar, had earnings and are just barely holding up. And if we look at companies that are directly related, Microsoft sold off significantly. NVIDIA, of course, sold off. This was supposed to be the indicator of a strong market when you have great news and the market goes up, but instead you had great news and the market sold off. So SPY is bouncing the last couple of days, but interestingly, that actually makes it difficult to position because then it's like you can't really buy tomorrow because you just went up 2 green days in a row. So there are companies that, are sort of bouncing or giving the indication that they might bounce, like SMCI or Meta itself. But it's never easy to buy a falling knife. And I think it's easier to buy a company that's sort of gone sideways and presented a level for you. So that's the argument for Nebius. As for similar companies, Wolf, which is actually similar to Cipher, which we just described, Cipher, C-I-F-R. Cipher actually has the deal with Google. I guess we were talking about Iron to get them confused. They all sort of follow the same characteristic, right? But Wolf does have this recent earnings and a higher low here. So there's a little bit of advantage there if you're just looking at it as a technical trader, which it's fine to look down on technical traders. It's like they don't know what's going on. But they actually sometimes can get a better read on what's going on than someone who gets lost in what these companies do because they're getting real-time information from buyers and sellers in the chart, right? So here's a little bit about Wolf. 10-year hosting deal. This Fluidstack is basically Google. Google is backing $2 billion of Fluidstack's lease obligations. So indirectly, Google is basically cutting a deal with Wolf. 200 megawatts is whatever it is, a fifth of a gigawatt. So it's significant, but it's not crazy. It's a multi-year revenue stream, and we'll see what happens. But if you compare it to other companies, and I mentioned CoreWeave, I didn't actually get the chart yet. CoreWeave has never really made a big move. I mean, there was this IPO and euphoria, sell-off, and then this was the $14 billion deal with Meta right around early October, and it just really rolled over. It just never actually went at a time when so many companies were going crazy through September and October. Sure, CoreWeave went up a little in September. I mean, 40% is a lot, but it didn't go up much after that. And if we look at Core Scientific, the company they were supposed to acquire, this was when the vote was on Core Scientific, and they voted not to be acquired and sold off, as well as CoreWeave. So definitely pretty rough. This was the time where there was the rumor that they were to be acquired. That was a sell the news event, but when the actual vote came, they never got acquired. So Wolf definitely holding up better than some of those other companies, especially in the past week or so. Their earnings are whatever they are. They're not good, but a lot of these companies don't have earnings. I mean, Oklo is the poster child of no earnings, and a company that went crazy in September and October, again, at a time when I mentioned CoreWeave did not, and is kind of unbuyable now. So it's great that this speculation name went crazy, but Oklo I actually put in the same bucket if CoreWeave is not really buyable right now. The same bucket as the rare earth names. USAR, MP is holding up, but it's still a rare earth name at a time where China came out and said, we're still going to provide rare earths, we just want to approve them. So that's the reason why some of these Bitcoin miners turned data center plays Wolf are interesting. And Iron, also in the conversation. It's kind of the same chart, actually, as Wolf, similarly, except for the fact that it doesn't have that higher low. So, someone might be buying Wolf instead of Iron. Maybe they got spooked by this earnings. It's down significantly since earnings. You never really know why a stock's doing what it's doing, but if you can put enough pieces together, you can just try to pick the right one. I think Wolf is slightly stronger right now than really any of the other ones. Riot and Mara, these numbers are great. 600 megawatts is a lot. It's 3 times the Wolf facility. But they don't have a contract. So Google is basically contracted with Wolf, and Google's actually doing incredible in the last week. Broke out at a time when a lot of these companies were not doing well. Gemini 3 just got released. I actually tried to use it for this video, but it wasn't able to recognize that I was talking about a certain company. So I just skipped back over to ChatGPT for the time being. But a lot of people are raving about Gemini. And then as for Riot and Mara, it's great that they were Bitcoin miners and now they're becoming AI data center companies. But it's taking longer, or at least they don't seem to have any big deals yet. So edge computing is super valuable. Basically will allow you to do inference, which is like make decisions all over the different parts of the country. I don't know what edge computing is. I mean, who knows what this is? What is edge computing? Literally what it is when you have a phone is it just means, for example, you would run the LLM on your phone instead of sending your data to the cloud. So it's a more secure version, but I'm not sure if Mara and Riot are exactly up to that or what they're doing. So here's what Wikipedia says. All right, this will help us out here. Yeah, source of the data, physically close to the user, quantitative explanation of the data center. Yeah, so it doesn't make any sense as to how they're going to help with that, but safe to say it's not driving their business. We can see that pretty clearly in the stock chart. So this is Mara and Riot, and I wouldn't want to own anything that's directly connected to Bitcoin right now. I mean, this just looks horrible. Riot, same situation. Bitcoin, I mean, if you haven't seen it, pretty yucky. So I do think Wolf is in the right bucket of some strength. It's not like the volume's crazy here, but I mean, the volume wasn't crazy over here when it went up significantly either. So you don't need a ton of volume, you just need a lack of sellers. And it seems like right now there's a lack of sellers. And this big red day, November 20th, just, Thursday, was this day. So the whole market went down. It's not super worrisome that Wolf went down significantly there. So anyway, that's pretty much all the signs that point to Wolf. There's a bunch of different ways to compare all these, but I don't think it's super worth our time. I think the main story is just that pick the companies that are already pivoting and that already have an agreement. And this is the agreement with Google indirectly for Wolf. These other companies, I mean, this acquisition never happened with Core Scientific, so CoreWeave and Cores are not interesting right now. Wolf is. And then the first company I mentioned as well, NBIS, has that agreement with Meta. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to take advantage of that $19 Black Friday sale, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. That was better.
All right. Check this first indicator out.
Any comments?
Do
Go
you
ahead and
see
drop
that?
those.
That
on
could be
YouTube. I
looked
can
at
see it. I am
technically
live.
as a double
You can see the comments.
top
That is.
or a
All right.
lower high. Okay. Okay, look at this one more time. Look at this right here. Okay, you got this and this, but peep this for me, guys. Do you see how, look at this closely. Do you see how this is here? This is a little bit lower. So that's already telling us that we're making a downtrend, okay? And then look at this right here. This really got coach attention. This rejection right there. Do you see that? Okay, that told me that the sellers was not playing and they were pushing the stock down, okay? And so because they
It's hard to get
made
excited
that
when your
move,
videos get 12 views.
okay, look at what happened. We got rejected here, okay? So this is resistance. That line right there is resistance. We came all the way down to support, okay? Follow this because this is going to help you know what you need to do. But then we bounced off support,
what the heck is this
but then boom, we got rejected there too, okay? So that's also resistance. And so most likely we are going to still come back down and test support, but we need to get back above this level here to, again,
dollar stock. Technical analysis is killing me over here. They're running a Bitcoin treasury crypto reserve strategy. Oh my god. Jeez. Oh boy, this is scary. Alright, over here we're talking about a whole nother company. Company on the Discord platform. Asset entities. No idea. Boy. Asset entities was the original company. They were a social marketing company. They filed a merger with Strive. They're now a Bitcoin treasury company. They're going to accumulate Bitcoin. They raised $750 million in pipe. How is this company going to succeed when MicroStrategy is employed? That's what we need to figure out. All right. $1.5 billion in money raised. Ooh, they don't have debt. Okay. Sure. 10,000 Bitcoin. They're raising money through pipe offerings. So how is AST raising money compared to MSTR? That's what we need to figure out. Seems like it's the same, no? Private investment in public equity. MicroStrategy issues debt. Okay, whatever. Hopefully someone will correct me. I think not quite here. There is one stock that is about to skyrocket. The stock is $1 right now. The company is ASST, ticker symbol, It was really Asset Entities as a digital marketing sort of holding company, it seems like. Since then, they partnered with Strive, an asset management company that had $2 billion in assets under management, and they were able to make an acquisition together with Strive of another company that has about 10,000 Bitcoin. So this is now a Bitcoin holding company. And before you get a little bit of worry that it's like MicroStrategy, which MicroStrategy was Michael Saylor's company, is Michael Saylor's company. That was originally a software company. And then they weren't growing and they had to grow. Otherwise, they can't really stay in the S&P 500, right? And their best idea was to just buy Bitcoin, which they ended up doing. And then they bought so much Bitcoin that they just became a Bitcoin holding company. The way they bought Bitcoin is by issuing convertible notes, which are debt. And great thing about debt is it helps you when the market's going up. But as Bitcoin has dropped significantly, MicroStrategy's been going down a lot as well. So this company, ASST, has been raising money with more traditional financing for a startup or a public startup, which is a PIPE, public investment private equity. I know that's doesn't sound very public, but they are publicly listed. They're raising money through big investors that way. And they've raised enough money where they don't have to raise money via debt. So it's a slight difference of choice compared to MicroStrategy. Maybe that makes them a safer investment as a Bitcoin treasury. Either way, it's a $1 stock. So the upside is significant just based on where the chart is right now. They're down a bunch over the past couple of weeks. That's the $1 idea, and we'll go into depth on what exactly they do, how that money raise compares to MicroStrategy's money raise, and why a Bitcoin treasury can be a good idea. Now, if you're feeling a little bit like you want another idea, I got you. Apple is my other idea. On the complete opposite side of the spectrum, they did I think it's $1 billion deal with Google to license the use of Gemini, which is Google's LLM like ChatGPT. They're going to use that with Siri. They were previously using OpenAI. ChatGPT with Siri. Gemini 3 has had excellent reviews. People really like to use it. I tried it out recently, like 10 minutes ago, and had a little hiccup with some of the financial stuff I asked about it, so I just haven't used it. But that's great because I know a lot of people who have Apple products, iPhones, are not going to be asking you financial questions anyway. So the reviews are great. That partnership's great. Apple's about to break out to all-time highs again, it looks like. So that's another idea for people who are a little more cautious. So let's jump into these ideas, starting with asset entities, ASST.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here's the deal. There's always the stress case question of, let's say Bitcoin goes down a bunch, right? What's going to happen? And we'll get to that. But first of all, are they raising money in a different way than MicroStrategy? A little bit they are. So Strive, that's the asset management company that's now merged with this company, ASST. Okay, this is their recent raise just in the beginning of this month, like 10 million from warrants, which are they're not really like debt. It just means if a price gets up to a certain level, then people can get shares that way. So this isn't a lot compared to how MicroStrategy's raising, in my understanding. And this is not debt either. This is more like shares just getting sold in the market. So it's a little bit lower risk compared to MicroStrategy. 750 million is no joke too for a $1 stock. This is the stock right now. So if you're buying it right here, you're buying it on a dip, you're buying it off that real solid psychological $1 level, and the volume is significant. I mean, we're talking about $180 million a day, $100 million a day of volume. So you can definitely buy $1 million worth and not move the stock, which is pretty unusual to say about a $1 stock that has a spread of 2 cents. I mean, you'll probably move it a cent or two, but so anyway, that's ASST. And if we look at the MicroStrategy chart, you can see it's done significantly worse. It's basically followed Bitcoin. right? Maybe even worse than Bitcoin because it's leveraged. So don't really feel that MicroStrategy is the stock to buy right now. And a lot of people are looking at ASST's chart right now as well because it's a $1 stock. So that is what it is. The more eyes, the better on a little stock like that. And the price was a little bit above ASST's trading price when they raised that 750 million. So that's not always bullish, but it's usually not bearish. No debt financing is solid. Companies that have debt, they can sort of go up in a euphoric fashion, but they can also go down very quickly. And I'm not saying ASST hasn't done that. I mean, they're crazy. Some of these moves are absolutely crazy, from $1 to like $10 in a few days. So I'm not saying that's going to happen either. I'm just saying that in general, over the long term, this is probably a better way to do financing. Not that you have to hold it for the long term, but it's a little bit of a one less red flag to worry about on a $1 stock. That's all. They do plan to not just hold Bitcoin, but also to probably trade and invest that Bitcoin. That's great. Everyone thinks they're going to be a great trader investor. So crypto trading, as we heard from the FTX situation, is not always easy, even if you're the smartest people in the world. This is the $2 billion that Stride had. And as we compare it to MicroStrategy, they issued these debt that would be converted into shares. So it's low interest rate debt, but still, 600 million is actually less than asset entities raised. This is just one recent offering, but still, it's slightly, arguably less risky. So we'll see what actually happens, but that's the argument for stability of this stock. Now, if we look at what happens when Bitcoin comes down, this is what people always talk about. It's like, yeah, this is great when everything's going up. But let's look at this scenario. Bitcoin drops 30%. And here's how much Strive has of Bitcoin, $600 million, according to the filings. And this is how much they raised, right? And they're going to raise, they're not going to raise, they're going to issue money to raise more money in the form of dividend. So that's another instrument that they're employing, innovating on, I guess. It sounds pretty weird to have a dividend on a $1 stock, but this is what happens when you have crypto companies. They're going to accumulate Bitcoin and outperform Bitcoin. That's, of course, the plan. Of course, if Bitcoin goes down, the value of their BTC treasury falls at that same amount. And that could be a problem. 30% is a lot. I mean, drop from 80,000 down 30% would be something like 55,000, which seems pretty low for Bitcoin, but 80,000 seemed low when we were at 120 as well. So they might have to cut that dividend, but that seems like not a big deal. Of course, they might not be able to issue even stock. Or if they do, the price might go down a lot. And of course, if Bitcoin drops significantly, I think we can just be rest assured this company is cooked. I mean, let's be honest, MicroStrategy is probably cooked as well. I don't know that. I'm sure Michael Saylor has a good argument for why it's not cooked. But this is not a safe, long-term bet. So just getting that out there to be crystal clear, that's what's going on here. So they are Strive. This is the combination. This is the original entity, asset entities, still called that on this website. And this is what they used to do, social media marketing, blah, 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 Discord, whatever. And this is common, actually, a little company. It's not so little anymore. It's $1 billion market cap, starting to do something really different. So that's ASST. Now, if that seems a little bit, hair raising or high risk, that's why we're talking about Apple as well. So, and not just randomly, Apple is at this all-time high breakout level. If we look at a 5-year chart, here we are, all-time highs. And sure, we had a little bit of a failed breakout. Initially, this looked like it was going to be the breakout. It didn't happen, and then it did make it. The earnings this was the 10-10 day, which sort of cooked that breakout. The earnings were solid, but the sell-off still happened. The earnings beat, and we've gone sideways, which, again, given recent moves in the market, down significantly. Sideways is great. We're curling up, so if the market can just go sideways even, this could break out. Of course, if it goes up, this will probably break out even sooner. Could be wrong. Some crazy news could happen, but that's definitely what the chart's saying. And then they have this partnership with Google's Gemini, which, as of recent reports, as of like a few days ago, Gemini seems to be doing awesome. People are switching over to Gemini. Not saying that OpenAI is cooked, but I'm just saying that they were using OpenAI, they switched to Gemini, and it seems like they saw the writing on the wall and chose a model that's doing super well. So they sort of get the best of both worlds. They have all the data. Gemini is licensed to them, so they use it on Apple hardware. So they get to keep the privacy, but also get the benefit of the best model. And yeah, $1 billion a year is significant, but keep in mind they were already sort of paying something like that just to have, well, actually, it's kind of backwards, wasn't it? Google was paying them to have Google be the default search engine on Apple's Safari browser. So I guess this is the opposite, but they're definitely used to cutting deals with each other. I guess if they were kind to Google, Google's kind to them now, allowing them to pay Google. But anyway, this could definitely be a problem, but probably not in the next 3 years. So we'll see what happens after that, but this is not a long-term idea. So I wouldn't worry too much about this. And look, if people are actually using Siri, that's great. If people are associating Apple with intelligence, I mean, Apple Vision Pro came out and people tried it out and it was super exciting for like a couple weeks. And then it was like, well, I don't want to wear like a refrigerator on my head. So maybe Meta has sort of won the eyewear game, which might be the next form factor. But it seems like $1 billion in a year is a small price to pay for staying in the conversation. They aren't really leaders in AI, which is crazy to say after they've been leaders in pretty much everything else. But it seems like they're just giving up, at least on the LLM side for now. And if their models do improve, maybe they'll get rid of Gemini. But right now, this is a partnership that seems to make sense. So that's pretty much what's going on in the AI part of Apple, which AI is whatever it is, 90% of the GDP of the US right now. So it seems like to be almost the only thing worth talking about, literally worth. But who knows? Obviously, Apple's main results were solid. I think they sold some more iPhones than expected. And 140 billion holiday quarter estimate, Q4 estimate. That's solid. I think they did 100 billion in Q3. So that's seriously juiced. It's 50th anniversary year. That's insane. That makes me feel old. Not that I was around then, but you get the idea. So anyway, of all the companies to look at, Apple certainly looks like it's not only in the conversation, but literally ready to break out. If we look at these other companies, Google already did break out. That's why we're not talking about Google. Other major ones, I mean, Meta you can't buy right now. You can, but you're buying a dip. Which I know everyone likes to buy the dip, but maybe you wanted to buy the dip here, maybe you wanted to buy the dip here, now you want to buy the dip here, really? And there have been other companies that have dip buying has been a good idea, but look what happened eventually, right? Sure, Warren Buffett brought United Healthcare here, maybe you bought it here, you got a pump, but after earnings, this is down significantly, and it's been tough to get position there. As far as other Mag 7 companies, Tesla holding in there, but you can't buy it here. It's in no man's land. And then Amazon, of course, got the green day today, but big sell-off after what was a solid earnings. And yeah, Microsoft sold off significantly. And even though the earnings were solid, this was the OpenAI deal where they pounded out that 27% equity deal. So those are the other Mag 7. I mean, unless I'm missing something. Let's see. Meta, Microsoft, Apple, Amazon, Google, Tesla, NVIDIA, right? So NVIDIA isn't doing so hot right now. No one knows exactly why, but maybe that little Trump is about to meet with Xi again, so maybe they'll be able to sell some chips over there and boost that price up. Point is, Apple looks the best right now. So that's these ideas. Asset entities, ASST, the $1 stock, and Apple. So if you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. That'll be posted in YouTube posts once a month for subscribers. If you want to take advantage of that $19 Black Friday deal, head over to stockscommunity.com. Check out those testimonials. Pretty fire results. And look, market goes up, market goes down. It's easier to buy stock when the market is going up, but it's still important to keep the money you made and hang in there and look at where money is rotating. And right now, it seems like we're starting to get a little bit of rotation back into the QQQ, and Apple, as well as ASST as a speculative play, seem like good ideas. All right, see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.